Welcome to the Ivari tutorial app for WFG, Section 3, Financial Underwriting Guidelines. Financial underwriting is the process of gathering and assessing information to ensure an application for insurance is consistent with the likelihood of financial loss in the event of a claim. Much of financial underwriting is based on principles governing the appropriate level of coverage in a given situation. One of the most important factors of financial underwriting is to determine if there is a legitimate need for the amount of insurance applied for. Primary objectives of financial underwriting are minimizing anti-selection early claims, preventing suspicious or fraudulent claims, reducing the risk of early collapse. In order to assess the above, we require the following information: reasons for coverage, how the sum insured has been calculated, client's financial position, income, profit, net worth, debt, valuation, etc., details of any existing insurance coverage. As an advisor, you are the key source we rely on for providing us with financial information about your client. How? By giving us a comprehensive picture of your client's financial situation up front, you can make the process more convenient for you or your client while enabling us to make underwriting decisions faster. Using the needs analysis of tools such as My Insurance View and incorporating it with the application will help the underwriter to financially assess your client. Determining how much insurance protection your client needs today to protect their loved ones should not be complicated. First, identify your client's current debt. Do they currently have a mortgage? If yes, what is the remaining amount owed to the bank? Do they currently have any loans, automobile, credit cards, personal loan, line of credit? If yes, what is the remaining account owed to the bank? What is the important financial expenses, financial coverage, executor fees, etc.? Financial expenses should not exceed more than $35,000. If more is needed, further explanation is required. Secondly, to determine your client's future needs, to help you determine their future need, Ivari issues a custom factor that makes it into account the remaining income year based on age and is already assumed a reasonable interest rate. Use the chart below to determine your client's future need. Income replacement formula for life. Age. Okay. So I still don't know what this chart is supposed to do. I think this is a multiplier or something. They need to explain this. And this is for people who are not employed. This is your income factor when you're not employed. That's really crappy. You can also add the following, but it needs to be a reasonable amount and you need to provide the information. Emergency fund should not be more than 6 months of monthly income. Child care expenses should not be forever according to the CRA, roughly 90 credit a year. Education fund, annual amount X years, X number of children, estimate per child 5,000 years if living at home and 12,000 years if away from home. We will also be looking at the client's current assets to understand the investment risks and need of your client, such as cash and savings, non-registered savings investment, registered savings investment, TFSA tax-free savings account, other investments. By looking into the information provided, the underwriter will determine if the financial objectives of a client are reasonable and attainable. In order to be reasonable and attainable, the underwriter will also look for the client's ability to pay premiums such as policies that lapse in the early years, making it unprofitable for everyone. How much insurance premium can the client afford? Is the quoted premium a reasonable amount based on the information provided earlier? The underwriter will use the percentage of the client's current income to determine the vulnerability of the proposed face amount. Any existing in-force insurance will also play the role determining the face amount proposal and the total insurance need of your client. The underwriter may also need additional research on your client, such as verification of address, verification of identification, etc. How to provide information to your underwriter. It is important to ensure that the following steps are taken. Complete the financial questionnaire with the application. Provide one of the following additional pieces of information: My Insurance View over a copy of the needs analysis, the third-party confirmation such as a notice of assessment, a copy of the client's investment portfolio assessment, financial statement, or bank statement. Inspection reports. Inspection report may be conducted according to the age amount chart and authorized by the client in the application authorization. For more details, refer to the notices and consent pages of the application. An inspection report is a confidential interview conducted over the phone. Your client can schedule a time for the interview that is convenient for them and can feel confident that the interviewer will be a professionally trained employee of a service provider authorized by Ivari. By gathering the important financial information, an inspection report provides financial details, confirmed with the client accountant, and third-party verification where needed. Acceptable sources of third-party verification include a financial advisor who is at arm's length with the insurance sale, or a tax lawyer, banker, or you, the advisor, who has legitimate access to the client's true financial situation and is connected to the sale. Some verification may include the sources and designation as well as information on your client, unearned income, a breakdown of assets and liabilities, investment portfolio, T4 and T5, and net worth. Our best resource is you, the advisor, and as you know, your client and have provided reasons why the insurance is needed. By giving all the information up front you to the underwriter, it will speed up the process and help to avoid delays. In summary, here's a quick view. Client's current debt: mortgage, personal loan, car loan, line of credit, credit card, final expenses, other expenses. Future need: income factor. You saw this already. For unemployed. For future need: emergency fund should not be more than 6 months of monthly income. Childcare, really? Childcare should not be forever, and according to CRA, roughly 19 grand a year. Education fund: annual amount X years, X number of children, estimated per child, 5 grand per year if living at home, and 12 grand per year if away from home. Really? Wow, that's a lot. Current assets: cash and savings on hand, non-registered savings, registered savings, tax-free savings account (TFSA), other investments, vulnerability annual paid premium in relation to income, total annual planned premium per illustration. Enter the amount on the illustration. What illustration? Income declared: if income is between 10,000 and 20,000, should not be more than 7%. If income is between 21 and 40, should not be more than 15. If greater than 41, should not be greater than 20. Percent of planned premium: annual planned premium divided by account income should not be more than the above. Since the summary is only a guide, for any value over the suggested amount, expect the underwriter to require tangible financial proof. These guidelines are not a promise that Ivari will issue the amount submitted. The full assessment of the case needs to be done in order to justify the amount of insurance submitted. The other financial... So what is this bullshit? The other financial justification can be utilized, and a cover letter of explanation should be provided to help the underwriter justify the proposed face amount, whatever that is. The underwriter can request any requirements at that time. These guidelines may change at any time without further notice.